The housing market continued to show improvement with existing home sales measuring actual closing in February increased 0.8% to a seasonally adjusted annual rate of 4.98 million unit pace. From January figures, slightly upwardly revised, 4.94 million in January. On a year-over-year basis, February of last year to February of this year, existing home sales were higher by 10.2%, which marks 20 consecutive months of year-over-year increase. The national median existing home price in February was $173,600. Repeating, $173,600, which is an increase of 11.6% from 1 year ago. The mix of homes issue is still at play with the lower end home sales shrinking while the upper end market is beginning to show a solid gains. For homes those priced $500,000 and over, it was a 20% home sales gain from 1 year ago. But generally, we also note that the median price, even though it has that mix of home issue, that is a good leading indicator for, say, Case-Shiller price data and other repeat price measurements. So it will be interesting to see if Case-Shiller price data in a few months begin to show double-digit price gains. Because of these strong price gains, we expect, or I should say the factual, last year, because of the price gain, the housing wealth accumulation was $1.4 trillion. And this year is probably likely to top that figure in terms of housing wealth recovery. And based on my estimation, that will translate into about $70 to $110 billion in additional consumer spending. To put that in context, that's roughly in line with the sequestration figures. So what the housing wealth is implying is that because of the housing wealth is preventing the economy from going into a recession and certainly softening the blow related to the sequestration issues. And in fact, economists are quite surprised that retail sales are holding on even with the payroll tax adjustment that occurred in January. Inventories, I think this is the key figure that everyone is watching. Inventories at the end of February increased by 10% from January. So from January to February, it increased 10%. Still, it is down 19% from 1 year ago. There are 1.94 million homes available for sale, translating into 4.7 months supply. We did anticipate an increase in inventory in February because this is a normal seasonal pattern. Nearly all February there's a higher inventory. And when we looked at the past data, a typical increase is about 120,000 additional homes coming on in February. This year it was 170,000, so more than usual number of inventory coming onto the market, which is a welcoming development. In the last month's pending home sales release, we also included our forecast. So let me repeat on the forecast part. We have scaled down the home sales forecast for 2013. We had been calling for 5.1 million home sales. Now we anticipate 5.0 million home sales for the year. But we have increased the home price projection. We had earlier called for 4% price growth, but we think it's going to be about 7% price growth this year. And this combination of slightly lower scaling down on the home sales while bumping up the prices is just due to the inventory situation, where inventory, we don't think we will get a full relief this year. Only way to truly relieve inventory is for the builders to build more, and they need to increase their production by at least 50% to get us back to normal. And I don't think that will happen anytime soon. Many of the small-time builders not the Wall Street builders, but small-time builders are still hampered by lack of construction loan availability from their normal ties to community banks, local banks. So maybe they need to revisit why the local community banks are having very difficult time making those construction loans. Is it excessive regulation, regulatory uncertainty coming down the line? They need to visit that, because I think it's the local builders getting into action would be a very healthy development. We don't want the large player to dominate the market.